Okay, hi everyone. I'm going to start now, just to make sure. Can everyone hear me? Yeah, I think so. Okay, so that's a small note. Okay, so today we're going to talk about placing stop losses and taking profits. Now there are several ways to do this. Stop losses mostly have to do with identifying impulses, while there are many methods which we can use to take profits. So wait, I just okay, I'll start with the basics, just in case anyone doesn't know how to take profits. So, I mean how to set a stop loss. So, basically, what you do is you go to stop limit. I'm going to use Binance for this. And the stop is where your order will get triggered. So, just let me check it. Okay, it's fine. So, if you place a stop here, so the low is 15,750. If I were to place a stop here, then the limit order is the order which will get triggered. So basically, if both the stop and the limit are the same, then as soon as the price reaches the stop, which is 15,749, an order to sell at 15,749 will be placed. Now, the risk of doing this is that the price can go below your order and not trigger it. So say that I put this lower at 35. So as soon as the price breaks down from here, so it only needs to reach one tick below 15,749, an order will be placed in the queue for 15,735. Now, one more thing, if I place this here, it doesn't mean that my order will be triggered at 15,700, but when the stop is triggered, then the order will be filled at the highest possible price until 15,700. So if there are several orders here at buy orders at 15,730 or 740, then they will be triggered higher. So basically, this is just the lowest possible number in which your order will get triggered, but not necessarily the order in which it will get triggered. So basically, the lower you put the limit order, the higher are the chances that it will be filled, because like, as you know, you can have a major dump which blows right through your order and doesn't fill it. So the lower you set your order, the higher the chances it will get filled. However, it can be filled at a lower price. Sorry, just a second. Okay, now I'll just tackle the OCO order for just a second. Now, the OCO order is very similar. So the stop and the limit parts are the same. So if I do this, but on the other hand, you can have now the OCO order, the price, the stop and the limit parts are exactly the same. So the OCO order is a stop limit order combined with a regular sell order. So if I do this, then the price will either do a stop loss order once the stop is triggered, so right below here. Or alternatively, if the price increases and goes to 59.99, it will sell there. So basically, it's either one or the other. I think what OCO stands for is one cancels the other. Yeah, it's one cancels the other. So either stop loss or a normal sell. Now, if you're doing futures, you can set a stop market order. Stop market order means that once the stop is triggered, it will sell at the first price it can. So basically, there is no limit order, so it's not a stop limit, it's a stop market. Stop limit is the same. You have a stop and the stop limit and the limit. Stop market is that once the stop gets triggered, you you sell at whatever the market price is right there. Now the upside to this is that you cannot have an unfilled order. However, you can sell at a much lower price if you have this major dump. Okay, let me see what's my other. Okay, cool. Now, first I'm gonna talk about stop losses. I have some examples here. Now, we have this Ethereum movement right here, right? So, first thing you can see is that there is a, now, whenever I'm doing a trade, whatever the trade is, any type of trade, I always go to the, yes sir, I always go to the higher time frames first and then gradually move to the lower time frames. So I'm going to start on daily and then start moving below. Now, the main thing about stop losses is try to identify an impulse and then use your rules to set the stop loss. So basically, when you see impulse developing, you try to sell, you put the stop loss. So one of the rules is that wave 2 cannot go below wave 1. So you see impulse developing and you set the stop loss for wave 2 below wave 1, because if that is broken, then your impulse is invalid. You can do the same with wave 4 and wave 1, because wave 4 cannot touch wave 1. So you do the same. The other, if you're not good at LA wave theory, if you just never wanted to do this, you can either, let me write it. Or place it at the deviation. Now, I like, the thing about placing at the deviation is that sometimes you get a very stop loss very far away. Just okay, so yeah. Now we have Ethereum, right? And there's a horizontal resistance at 475. We currently have a possible bearish engulfing candlestick. Now let's do indicators. What we have here is a bearish divergence, right? In the RSI. So we have the price trading at a higher time frame horizontal resistance level, and then we have a bearish divergence in the RSI. So there are two signs of weakness in the daily time frame. So what we do now is we move to a lower time frame. Now I don't like using all time frames because you can get conflicting results. So I'm just going to go with a daily and 2 hour for the purposes of this. So when I say you place it above a deviation, means that you place it above a wick high. So if I'm shorting Ethereum, my stop would be right here. It's not that far away from the price. We already have a wedge, a breakdown from the wedge. So my stop will be placed here. Now, If this is the beginning of a bearish impulse, which I don't know that it is, I'm just hypothesizing, this cannot go here because it would violate EW rules. So that's a very good place to place a spot loss. If you caught the price somewhere here, if it goes here, then the stop loss can be placed here because this would violate EW rules. Now, if you watched the first webinar, I like using triggers to enter. Now, my triggers are the MACD and the RSI and the stop, sorry. So for me, again, this is the first webinar. I will post the link in both groups once we're done. So for me, a trigger is when you have consecutive higher bars. So that's 1 and that's 2. And you have a higher close. So basically this, okay, this I wouldn't count because it's not such a higher close, but you need 1, 2, and a higher close. So this for me would be a signal to enter. You can use it in combination, so you would need a higher close, a higher momentum bar, a higher close, and a bullish cross in stock. So all three of them would give a stronger signal. So say that I entered here. Right here. Now, when I say below deviation, place the stop loss below a deviation. Wait, where's my text? So either trail stop loss or place it below at a deviation. It would mean right here. Because you already have a wick low there that might have been a stop hunt. Now, stop hunt means when people are trying to just trigger stops and then move in the other direction. So yeah, this is possibly a stop hunt. So if you can identify a stop hunt, that would be a really good place to place a stop below it. So you find a stop hunt and then you place a stop below the stop hunt. Now, say you entered here, it's going well, price is moving up. Now it's going down. What you can do is trail the stop. I said in the beginning. Now, you can trail the stop at every single wick. So once the price goes here, you can put the stop here. Then again, the price goes here. You put the stop here. It still wouldn't have been triggered. I don't do that sometimes, but not really. Now, something else you can do is use the parabolic SAR. So it's an indicator, just write, so this. And it gives you these dots here. And you can place it below the dots. So you entered here, price goes here. You can just manually trail this, right? So here, here, you would have been stopped here. Not such a good profit. Or alternatively, you would have been stopped here, slightly better profit. Now, the thing about the parabolic SAR, so this week was really bad, like you would have been mad if you got stopped here. The thing about the parabolic SAR is that you need to use the same time frame you did for finding the trigger. So if I found the trigger here in the 2-hour time frame, then I need to use the parabolic SAR in the 2-hour time frame and not in the like 6-hour or 12-hour or daily maybe or something, right? Okay, yeah, so basically for stop losses, either place it below deviation or trail it or Elliott wave rules. Now, I don't like placing stop losses below horizontal levels or above. Like if I were trying to short this, I wouldn't place the stop here somewhere. Same with here. I don't like doing that, and I don't like placing stop losses below trend lines. So it's either Elliott wave theory or it's deviations or trail it. Now, we have another descending wedge here. So when do we get a signal? We might have entered here, no cross, here maybe. So what we have here is 1, this did not close higher, 2. So that's our signal here. We might have waited for the bullish cross in stock to enter. So we would have entered here, I guess, and stop. You could do it here, but since it's close, I might even do it here. So I would have done it here because it's relatively close. And again, if this is an impulse, which I believe it is, then this is some type of correction, A, B with a leading diagonal, and this is a new move or whatever, then this would invalidate it. So the stop would have been placed here. If we were using the parabolic SIR, so we entered here, we would have manually trailed and we would have gotten stopped here. Slight profit, not too much. Now, the parabolic SIR is better in uptrending markets. So if you were to enter somewhere here, for example, like in ranging markets, you will always get stopped with the parabolic SIR. But if you entered here, let's see if we had a trigger there. Yeah, sure, we had a trigger here, bullish cross here, so we would have entered right here. So that's our MACD trigger. This is our stock trigger here. Say we enter here, and then we're trailing the stop, right? So it goes up, goes up. We would have been stopped here. So when you see a major uptrend, you just see an impulse just blowing upwards, then you can trail it this way. Now, another thing you can do is that you can split your stop loss in. You can split your stop loss in 2 places. So say that one of your stops is here. Again, we're assuming that we entered here, so price goes up. One of the stops we trail it, so for 50% of the total order, we're gonna trail the stop all the way here. But so half of the order would have been stopped here, and we still have the second stop loss. This is the more conservative approach because you can use the stop loss as a take profit order. Now let's go to a different example. Again, we had the trigger here and we entered here. So the stop loss would be placed. Let me remove this right here. Okay, now we'll just, if you were to trail this, would have been stopped here, which is a what? So you entered somewhere here, 14, 15%, a little more. Now I'm going to talk about take profits. Now there are several ways to take profits. I prefer fib levels. You can use horizontal levels. You can use, what else do I have? Okay, now, yeah, so there are 5 main ways which I'm going to discuss today. There are fib extensions and projections, horizontal levels, pattern targets, channel targets, and signals. Now, I'm going to do signals first just because it's very similar to the entry, so let's get it over with, and it's the shortest one. So if I use my usual entry method, right? So the MACD and the stock here to enter, I would use the same thing to exit as a take profit. So I would wait for a consecutive bars and consecutive lower bars and consecutive candle closes, and then a bearish candlestick. So, and then a bearish cross, sorry. So if I'm using the tactic to enter, I can use the same tactic to exit the trade. So yeah, it's basically this. I would have exited here and possibly here. Now let's talk fib extensions. Now the thing about fib extensions and projections. So again, we're assuming that we entered here, right? Now this has a lot to do with Elliott wave theory. So you need to find the seed wave, which means the first upward wave. So if I entered here again, you use an external fib for the first wave. Let me just clean this up. Okay, again, if I entered here, my triggers, whatever my triggers made me enter, or whatever method that you're doing told you to enter here. Now, you use an external fib on the first upward move, so the first impulse, and then you show the 2.61, 3.61, and 4.61. All this uses 61s. And they're relatively good predictors, so you can use any of them as take profits. So this could be your TP1, this could be your TP2, and this could be your TP3. Now, another thing you can do, which would make this a more accurate method, is use confluence. Now, so the most important one is the fib retracement, then projection, sorry, then external. So this is the extension, the first one. Now what I mean by retracement is this. So this is a low time frame move, right? And this is a high time frame move. So this is the original decrease, right? And then we try to enter here. And we need to take profit. So the first thing you can do is that use the 0.5, 618, and 786, most common. So you try to find levels which coincide with each other. 2.61 doesn't coincide with anything, we take that out. 3.61 is very close to 0.5. So this is a valid take profit area, right? You have a good confluence here, valid take profit area. Same with this. So yeah, if I were trading Litecoin, this too would be my take profit levels. So 0.5 and 361, 0.618 and 4618. Let me just clean this up for a second. Now, what I mean by projections. So, okay, again, more Elliott wave stuff. When I'm counting this, I have it as a 1 to 3.5 down, 1 to 3, 4, 5 down. So for me, this is the beginning of the bearish impulse. This. And then this entire move is just a correction in response to it. Now, this might look like an impulse at first glance, but we have this here. So it breaks the rules. 4 breaks 1, so not a valid impulse. So this is probably a complex correction, WXY, something like that. My most likely count here is WXY. But WXY is just two ABC corrections. Now this is explained in the Elliott wave, I think. I'm not sure. Elliott wave webinar. So basically it's this, ABC here, and ABC here. So we have that. Let me again clean this up. Now, where's the other one? Okay. Here it is. So use confluence. The most important is retracement, then extension, then projection, then external retracement. Let's do projection. So originally we entered here, right? So we had this, and our take profit was the 461, I think. Yeah, they coincided to some here. Now, say that I'm looking for another entry, right? So I think this goes higher. I want another entry. What I do is I use a fib retracement, so it bounced perfectly off the 618. I could wait for here would be my entry somewhere. Now, if I entered here, it's at the 618. What would my take profits be? If I'm entering here, now I said that the most important is the retracement. So this, then the extension, then the projection, and then the external retracement. So let's do projection. Projection would be, this is the first wave, right? So you identify the first wave, the seed wave it's called. Right there, this and this. Now you see if they coincide with anything. This kind of does, I guess. So yeah, this would be one take profit, and that would be the other. But you're trying to find more confluence, right? You're always trying to find as much confluence as you can. This is also horizontal resistance, so it's even better. Now, by confluence, I mean that, for example, waves A and C often have a 1-to-1 ratio, right? So this is A, you take the A, and you project it to the bottom of B. Look how well this has been, almost exactly the high. So now this becomes your most likely target, right? Move 6-1. It's almost at the exact top. And by external retracement is this, but it won't work here. So that's your second take profit level. Now, personally, I'm trying to short Litecoin because, like I said, I think this is the beginning of the bearish impulse. This is the retracement. And I believe the price will go down from here. So I'm trying to short Litecoin with a stop loss here. So it's right here. So I've been shorting from here, and then yesterday when my target was reached, so my fib confluence, I didn't short the exact top of it. Don't try to pick tops. Like if I get the target from 65.2 to 66.08, I'm gonna short here at the first one. Like I don't care to pick the exact top. This is a fine level for me. And it's the stop loss is very, very close. So if I short it here, that's a less than 6% stop loss, extremely manageable. Now, what are my targets for the bottom of the move since I'm shorting? Just a second, sorry. Now, one final thing about this I forgot to mention. Now, yes, we had the target here, but there is also a triple bearish divergence here. So like, don't just focus on fibs and Elliott wave. You can also use whatever indicators you like. So if you have a triple divergence here, it just reinforces your belief that this is going to turn down. Now, if I short it here, so my stop loss is what, 6%? Let's go with 6%. My first target is going to be here. As the impulse develops, I might use a projection or something, but right now I can't. And if this begins to move like here, so if I see that this is a new impulse like this, whatever, then I will move the stop loss right here. So it will be like amazing, 2%. Now, if you have say that your original stop loss is here, right? And you're extremely conservative, you don't want to lose all your money. What you can do is that, obviously, if your stop loss is 6% and the trade begins going in your favor, so when it's 6% below, so actually right now, you can sell half your order and leave the half with the original stop loss, so it's a risk-free trade. If this goes to 12%, you can sell a third of your order and leave 2/3 with a stop loss. So just do the math on it, it's like basic math, and you can get very easy risk-free trades. Or you can move the stop loss down for that matter. But this is my first target. This is my second target. And my third target would be this projected here. So my third target would be 39. Also would put with this wick here. Maybe we'll go a little lower to tackle out some stops, but that's it basically. My third target would be right here. What's the next example? Bitcoin. Now again, you can combine stuff. You can use it. So say that your first target gets hit, you don't want to lose more money. You take out some profit at the first target, then you use the trailing stop for the rest. You can combine these. I don't, like, it depends on the order size. Now, so fib extensions, horizontal levels, you kind of tackle them, and signals. Now, let's do pattern targets and channel targets. Okay, so I don't know if you remember this Bitcoin triangle here, like we were covering it. So, first of all, again, confluence. This is the most recent decrease. Right here. Now, let's just be fair and use it from the beginning. So we put all the fib levels here, right? And you see a triangle here. It's coming after an upward move. You think it's going to blow up. Now, again, if you entered here, the stop loss would have to be placed here. This is the deviation. So if you find this, I wouldn't do this. I don't do trend lines. Find the deviation, place the stop loss below it. Now for the pattern targets, you find the highest, the largest distance between support and resistance. So this. Now, this is not the highest target because there is no support line here. This is the highest. So the biggest length, you found this, and you project it to the breakout level, which is right here. Now, this gives a target of 11781. Our fib is 11586, so our target is right here. You would have picked it out pretty well. Short price moved up, but you're just playing the breakout of the triangle here and not everything. I think we also have an example on, say that you're again, let's go back to the S short. That's a huge bearish engulfing candlestick at resistance. If it plays out, it's terrible. Now, again, this is the longest part of the wedge. This is the target. Use fibs. The closest is 0.618. So I would do this. Now, once this develops, you can use a projection or an extension. So you find the seed wave, you do this, and you see if there's even more confluence. But you can do it with two. If that's too complicated, just use the pattern, length of the pattern, project it, and then use the fib and find the fib, the confluence with the fib levels, or even horizontal levels if you want, but I like fib levels. With horizontal levels, it would be here. But again, I like fib levels a lot more. So yeah, that would be basically, that's how you do it with a pattern. Same thing here. You have this wedge, breakout, it's here. Try to find the confluence, 0.786, so yeah, you would have sold here. It actually went lower, so it wouldn't have triggered it unless your stop was way below and wouldn't get triggered there. Obviously, it doesn't work every time, but you're just trying to play the odds. So in the long run, you will make more than you will lose if you use the targets. I'm going to do another example. No, let's do the channel first. Just a minute break, sorry. Okay, sorry for that. Now we're gonna do channels. Where's my channel? I think Wi-Fi is the channel. No, COT is the channel. So yeah, it's COTI. Okay, first of all, no, we'll tackle that later. So say that you caught this upward move, right? Now, this is the seed. No, sorry, the smaller one here. Almost got reached 4618. Like this works extremely well. You very rarely see a move go beyond the 618. So you got it here and you don't know. Yeah, you sold here, right? Amazingly, you caught the exact top, you shorted, but you don't know where to take profit. What you can do is use the channel, right? So you draw a parallel channel from here to here, and then you project it to the lows. When you're doing this, always use the exact lows, not the closes, not the most touches, use the exact lows. This is the first touch here, so use this low. Extend it, you would have taken profit here. Now, once the price moved back, as you can see, the channel, the resistance, the middle of the channel acted as resistance, and now it seems that the top of the channel is acting as resistance once more. Now, channels are usually, no, that's EW, I won't get into that. Another example which I wanted to show was here. So you have this trend line here. Once the price broke the trend line, say that you were watching it and you want to short it, maybe you also have a trigger. You don't, never mind. Now, your first take profit would be the 618 fib, second one would be the 786 fib. And let me remove this. Okay, Wi-Fi. Now, always go for the higher time frame first, right? So you have this downward move here. It follows the trend line. Price breaks out. And you want to know where to sell, right? So when using a fib, the first resistance is here. So this. There is horizontal resistance here also, but never mind. So now we go here to this part here because we want to do an, so basically start from higher time frames, in this case the daily, and use the fib retracement. Now, in this case, this entire move here, it's a counter trend move, right? So the original trend is down. Now, I don't know if this is the exact count, but it looks like it. I probably have it something like this, and then you have an, whatever, probably an ABC up or something. Then you move to lower time frames. Now again, like I said, I like to use 2 or 3 time frames at the most. Now I use the daily, the 6 hour and the 2 hour. The reason for that is that just you don't have to use the same ones, but I like to have them fixed. So you decide which time frames you're going to use and you stick with them, because if you use, let's say, the daily, the 12 hour, the 6 hour, the 4 and the 2 and the 1, like you can find results that fit your bias all the time. So you can find the bullish divergence on the hourly, even though everything is bearish, and then you can use that to enter on a counter trend trade. But if you use fixed ones, at least you're going to be consistent. Now, personally, I have this as a bullish impulse. 1, 2, 3, 4, 5. Wait, that's too big. Again, you find the first wave here and do the extension. So start from higher time frames, use a fib retracement, move to lower time frames. Use a fib extension. So use the one, 4.618 is here, but the other resistance is here. So in this case, it would give you a very wide range. What you can do is either use an external retracement or use a projection. Now, by projection, I mean this can only be done for wave 5s. So you measure the length of waves 1 and 3, and you either use the 618 to project the length to 4, so it will do here, or use the 1, which in this case will go much higher. Or you can use an external retracement on wave 4 and use the 1.61 and 27, which will give you a very close target here, the top. But basically, I would take profit here and take profit here, and possibly I would trade the stop loss, so it would have been triggered here. Now, the parabolic SAR works very well in uptrending markets. So if you entered here, you would have been stopped here initially, and then you entered somewhere here, you would have been stopped here. If you're ranging, then no, like you would have been stopped literally every 4 hours or something. But when you try to find an impulse, yeah, it does. Now, if I have this as an impulse, then this is an ABC. Now, how to find where the C wave will end? Again, you use the same method. First, use the fib retracement tool. You outline the 5.8, 618, 786, and the 0.5. Second, projection. A and C waves often have a 1-to-1 ratio. So you measure the A wave. That's the A wave, right? What is this? No, never mind, I'll put it here. That is the A wave. You take it and you project it at the top of the B wave. And it's closer to the 0.5. So in this case, you would expect a relatively short correction. And then enter again. Now, if you follow the Elite Wave Theory Program webinar, the first one, then you know that C waves are an impulse, right? So if you go even lower, this should go 1, 2, 3, 4, 5. So if you manage to catch the high, the stop loss would be here, because that's the beginning of the impulse. And then as wave 3 develops, the stop loss can move here, because this would invalidate it. Alternatively, you can use a fib extension here. And the 4618 is at exactly the 0.5. So considering that the projection, the ABC projection also gave a similar target, this right here would be your target for the move. Okay, so I'm just going to summarize everything quick. For stop losses, try to identify an impulse and use EW rules to place a stop loss. Trail the stop, use a deviation. By deviation, I mean a long lower wave. Now, If you see a market in a correction, either don't trade it because it's harder to place a stop loss there, because this is valid. It's an elongated flat, but the B can go below the A, or you can have a WXY which just like completely triggers all your stops, or you go to even lower time frames because the C wave is an impulse in itself. So if you're in a correction, you can identify the part of the correction which is an impulse and then use EW rules to place stop losses there. But this is more volatile because you have to use lower time frames. So that's basically it for stop losses. For taking profits, now I usually use fib. For me, it's mostly fib. So fib, start from a higher time frame, use a fib retracement, identify the first wave, use a fib extension. Alternatively, you can use a fib projection or external retracement. But go for confluence. Always go for confluence. It doesn't matter like what you're using. You can use a trigger, you can use horizontal levels, whatever it is, find confluence. If you don't use fib also, you can do pattern projections, horizontal levels, channel. Ideally, so the absolute ideal scenario would have a fib retracement level, a fib extension level, a fib projection, also a pattern projection, a horizontal level, and to top it off a channel. That obviously never happens, but hypothetically, if it happens, you would have the most confluence you can get. But if you find two confluences, maybe three, that's just fine, and it can most of the time give you a very good trade. Okay, so we're coming up on an hour, and that's basically it for today. So if you guys have any questions, write them in the group, and I'll also do the regular group tour. So yes, this is the premium group. This is a premium channel in which signals are given. So we have one signal today, one yesterday, another one yesterday, another one the day before that. So that's a lot of signals given on the daily. Also in the premium group, like we're different traders, so basically it's active during the entire day because we work in different time zones. So I'm usually in the European time zone, and there's another trader like when I sleep in the AM time zone. Yeah, so this is it basically. Maybe the questions are here. 12 people watching. Okay, I'm not seeing any questions, so I'm just gonna wait for a bit more, and if not, then this was it, and thanks for joining. Okay, so no questions. Okay, everyone, thanks for joining. It was fun, and I'll see you next time. Bye, everyone.